Welcome back to our weekly market wrap-up. Domestic equities ended the week on a strong footing, extending positive momentum for a third consecutive week, largely due to expectations of synchronized monetary easing by the Reserve Bank of India and the US Federal Reserve in December. Although sentiment remained constructive, market participants exercised vigilance regarding upcoming macroeconomic data, specifically monthly sales figures and international trade developments, which are expected to dictate the near-term trend. The focus has now shifted to monitoring global commodity prices and the trajectory of foreign capital flows to gauge the sustainability of current valuations. So, stay tuned, and by the end of this video, we will unpack the key drivers behind these movements and what lies ahead. For the week ended Friday, 28 November 2025, the S&P BSE Sensex advanced 474.75 points, or 0.56% to settle at 85,706.67, while the Nifty 50 index added 134.80 points, or 0.52% to settle at 26,202.95. The broader markets displayed divergence, as the BSE Midcap Index outperformed with a 1.19% rise, contrasted by the BSE Small Cap Index, which ended virtually unchanged with a 0.08% gain. This performance distribution highlights a market environment reflecting a cautious yet resilient undertone. Trading commenced with a corrective bias, as profit booking and uncertainty regarding the Federal Reserve's policy outlook weighed on asset prices during the initial sessions. This negative trend sharply reversed by mid-week, as renewed buying interest drove indices to recover losses and establish fresh momentum. The upward trajectory extended through Thursday, touching new record highs, before giving way to marginal distribution on Friday, as traders lightened positions ahead of key GDP data releases. So stay tuned as we break down the key factors behind this turnaround and explore what could drive the markets in the coming week. Let's take a look at this week's key the International Monetary Fund projects India's economic growth at 6.6% for fiscal 2025-26. Noting that robust GST frameworks should mitigate the adverse effects of recent US tariff adjustments. First quarter real GDP expanded by 7.8%, accelerating from the 6.5% growth recorded in the 2024-25 fiscal year. This trajectory underscores domestic resilience amidst challenging external trade dynamics. Elevating India to advanced economy status requires the persistent implementation of broader structural reforms to unlock long-term growth potential. The IMF highlights that sustaining current momentum depends on deepening these policy measures, rather than relying solely on cyclical recovery. Policymakers must focus on these strategic shifts to fortify the nation's economic foundation. Globally, markets exhibit divergence as Japanese core inflation persisted at 2.8%. Contrasting with a sharp 5.5% contraction in China's industrial profits. In the US, wholesale inflation held steady at 2.7% annually, while real consumer spending contracted, complicating the Federal Reserve's policy outlook. Concurrently, investors are scrutinizing ongoing India-US trade negotiations and the implications of evolving tariff structures. Among this week's top gainers, Aditya Birla Capital, by 9.21%, surged on robust institutional interest, reflecting an improving outlook for the financial services sector. Ashok Leyland, Parmashade 12%, advanced due to renewed buying momentum, driven by an improving demand outlook for commercial vehicles. Dr. Agarwal's Healthcare, Pump 7.85%, gained on positive investor sentiment, anticipating increasing demand for specialized healthcare services. On the downside, the top losers, Chennai Petroleum, 14.88%, dropped sharply amid profit booking by investors after significant gains over the past few months. Transformers and Rectifiers, 13.44%, retreated under sustained selling pressure, reflecting a weak earnings outlook and ongoing valuation concerns. Jaiprakash Power, 13.17%, declined notably this week, possibly due to institutional profit-taking following recent positive performance. In the unlisted space this week, activity remains robust, fueled by strategic expansions in the asset management sector and valuation recalibrations among leading non-banking financial institutions. PPFAS Asset Management has secured a strategic entry into Gift City as it transitions into a larger industry player. Simultaneously, Care Health Insurance posted revenue gains for H1 FY26 amidst elevated claim settlements. While investors are reassessing Hinduja Leyland Finance valuations against NDL Ventures stock metrics, unlisted names like SBI Mutual Fund, Balaji Wafers, Barar Finance, and IPL franchises continue to see steady investor demand as private market appetite remains firm. Reach out to explore more opportunities in the emerging unlisted space. That wraps up this week's market highlights. Here's what to watch in the week ahead. Indian equities start the week with a cautiously optimistic bias, underpinned by robust domestic fundamentals evidenced by Q2 FY26 real GDP surging 8.2%. While escalating bets on Federal Reserve rate cuts and falling Treasury yields buoy global sentiment, persistent FII outflows and rupee weakness remain critical headwinds requiring vigilance. Back home, markets will track the HSBC Manufacturing PMI on Monday, 01 DEC, following a dip to 57.4, and the services print on Wednesday, 03 DC, which previously rose to 59.5. Attention culminates Friday, 05 DC, with the RBI policy decision where the repo rate currently sits at 5.50% after prior cumulative cuts. Globally, China and the US dictate flows, starting with China's NBS Manufacturing PMI, 30 NOV. The focus shifts to US ISM Manufacturing, 01 DEC, previously at 48.7, and Services, 03 DEC, which expanded to 52.4. These prints, alongside Friday's 05 DQ Michigan consumer sentiment, will guide future interest rate expectations. With key macro data from major economies converging, volatility is likely elevated. Investors should pivot toward rate-sensitive sectors and domestic mid-caps to navigate mixed global signals, while maintaining strict hedges against currency fluctuations and shifting risk sentiment. That's all for today. Stay connected with Tikona Capital for more insights and wealth-building opportunities from the themes of the decade. Explore more on tikonacapital.smallcase.com to know more. Don't forget to like, comment, and share. See you next week.